Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, November 1st, 2024. Ron Quaranta here with my dear friend David Brill. We're waiting for our co-host Joshua Klayman to join us shortly. Before we begin, our usual disclaimers. Obviously, keep in mind that everything that David and Josh and I will be discussing are our own opinions, don't necessarily represent the opinions of our individual firms, and everything that we discuss shouldn't be considered anything like accounting, investment, legal, or tax advice, or certainly no token investment recommendations. I think we have Ms. Joshua has joined us. Josh, good to see you. David, good to see you both. Lots going on. Josh, I just did the disclaimer, so we're all good. We've got the election coming up next week. Halloween is over. We're well into fall. David, Josh, what is going on? David, start with you.
I'm enjoying October. My hope is we close on a high note here. And, I do think that we will push again against the all-time highs before Election Day. But this has been a good month. I think the momentum has changed. And I think there's a lot of optimism going into the election.
David, Josh, do you think the optimism, let's just dive right into that. And I know there'll be a lot more election conversation than we have. David, you and I talked about a post-election kind of webinar that we're hoping to do whenever the results get finalized. But Josh, David, do you think the kind of optimism is reflective of where people are seeing the election and where it might go? Is it a bet on a particular candidate, or how should we approach the thought process here?
Well, I think it's twofold. I think on one hand, October to April, May has been the more bullish time for trading crypto. Mm-hmm. And I think on the other hand, and I definitely want to hear Josh's view, I think there are really distinct views on what the crypto landscape looks like under a Republican presidency, if former President Trump were to win, or what it might look like under a Harris presidency. But I think, and I don't want to speak for everyone, but the majority of people I've spoken to feel that we're at sort of the worst level of regulation that we could be at. So we can only go up from here.
It can't get worse. Is that what we're saying, David?
I mean, that's what people have generally been saying, regardless of their affiliation. But, I do think there are reasons to be optimistic.
Josh, are you as optimistic?
So I am optimistic because it seems that, at least from those I've spoken with and my own personal view, it seems like no matter who wins, like David said, it's likely to be better than what it's been, we hope, right? And certainly many believe that if former President Trump prevails in the election, that actually things may be a lot better. Now, what's interesting, though, is I think when we talk to some of our friends who are, and I'm not saying you guys aren't these people, but people who are particularly involved in the DC scene, it often sounds like, well, actually, what the makeup of Congress looks like may have, as much or more of a significant impact. But I think just psychologically, I think people are feeling good and they're looking towards possibilities. What I would say, though, in practice, I see a number of projects where we've reached a point where, the next key will be what happens in the election. And I think that's really interesting to see.
David, Josh, I am also optimistic. I'm so optimistic that I'm almost at the point where David might actually be buying the steak dinner, just looking at the reports that some are putting out there, David, of 180K. We don't have to name firms, but I'm feeling a bit better about the wager. We've got a long way to go to the end of the year. Josh, David, when we talk about feeling better and the optimism and paraphrasing, like it can't get worse from a regulatory perspective. When you look at the news, though, let's talk about Wells notices. Let's talk about, is it, a regulator trying to get the last hammer blows onto the industry before the election? Do you want to talk about some of that, David and Josh? What are your thoughts on, again, how regulators are approaching this?
Well, I recently saw that a gaming company got a Wells notice, and I don't want to name them because I think it's better not to, but got a Wells notice and said that basically they had no real interaction with the regulator, with the SEC, and it just was, hello, I'm Mr. X, and you're receiving a Wells notice, and I'm being a little glib about it, but that's basically what they posted, and again, that's just not the way this process was intended. If this was an ongoing fraud or something that needed to be immediately restrained, there's a process for that. So just getting a notice saying, hi, I'm Mr. X, and you're going to be getting a Wells notice, that's not really the way it should work. And it pains me. And, one of the trade associations put out a report, and I think there's been $400 million spent on legal fees just for their members, fighting and pushing back against some of these, cases that are being brought against them. And, that's a lot of money that could be poured into development, into jobs, and really building out the ecosystem. So I found that a little disconcerting.
Josh, go ahead. And Josh, let me just ask you one question as a build to that. Again, just using the public information, we don't have to mention the particular firm, but one of the some of the information that's come out is the lack of detail associated with this particular Wells notice. Were you surprised when you read that, Josh?
So I should say, actually, just backing up for a second, if anyone saw like a very negative micro expression cross my face as David was speaking, I must clarify that had nothing to do with David. I had a 7-year-old approaching who I had told to stay away. It's Diwali, so they don't have school. And I was trying to signal, get away.
I was worried about David.
It probably looked kind of sinister for a second. So with that, I would say yes and no, Ron, to your question, because I think in an ordinary situation, or what I might imagine not being a litigator, might be an ordinary situation. I mean, what we've seen with certain other Wells notices, I believe, is not necessarily a lot of information. However, because we've seen some attached to like Form 8Ks and things like that. However, preceding that was an investigation, right? So the parties kind of probably could have figured out what that Wells notice was about in greater detail. And in fact, as you guys know, when this story first broke and we had been, batting it about, I had read a blog post, and reading it so quickly, I was like, oh, okay. So they're saying there were months of back and forth with the council. Then no, you guys corrected me and you were right. Like I had read it too quickly, and it actually said like that's usually what happens. And actually, evidently in this case, there was none of that.
Right. David, Josh, how do you see this playing out? And again, we don't have any transparency into what any particular regulator is thinking, but Wells notices don't get popped up in a microwave real quickly at a regulatory agency, right? Like they put some work and consideration into that. And I guess my question is there a stable of these Wells notices waiting for the industry?
Well, I think there's been a number that have been dropped on the industry, and there's some that maybe we don't even know about. They're meant to be confidential. And so, look, I think one concern that I've heard from a number of industry folks, and I had the good fortune of being at DC FinTech Week last week and spent a lot of time talking to people across the aisle, met some really interesting folks over there and listened to some great panels. And, a number of people are worried that there's a bit of stacking the deck so that whoever does take over as commissioner, if we do get a new chairperson, is going to have a stack of Wells notices and complaints against different crypto projects, in their pipeline, and we'll have to deal with them. And, it's unfortunate because I think it's one thing to create your own path, but then you're going to have to decide what you're going to do with all these either Wells notices or cases that are, in process if we do get a new chairperson.
Josh, I just want to point out that we started talking about regulators, and someone has a siren going off in the background in keeping with our usual pattern.
I was hearing that. I didn't know if it was the wind whistling or something.
I think it's the wind. I think it's been really windy in South Florida, and I think the winds of change are blowing through my apartment right now.
Josh, go ahead.
I mean, I agree with what David said. It occurs to me, just like we hear in the news, I don't know if whether it's true or not, but some are saying, oh, pollsters and others are trying to make the election look artificially close,
Right.
right? Um, and I just wonder whether, in addition to stacking the deck, some of it could be, okay, well, there's a lot of exuberance right now. Shall we maybe try and, I don't want to say put a damper on it, but do something. Yeah, so I do think it is interesting. I contrast it with the Ripple case filing,
Yes.
right, which was on former SEC Chair Jay Clayton's last day, which really left a legacy in that sort of way. Whereas this seems to be, it isn't the last day, and
Right.
but as David noted, it is like the pipeline potentially is filling. And also, we should note, as we saw from Kick way back in the day when Kick made public its the fact that it had received a Wells notice, and then it actually made public its Wells submission, which I think at the time was really unusual. At least I had thought it was. Presumably now the projects will, I guess, would they now submit a Wells submission? Or I wonder, does coming forward and saying, hey, I got a Wells notice when you don't have to,
Yeah.
does that signal that you're not going to do that step? I don't know the answer to that, but it does occur to me that at least by sharing the information, you're no longer holding material non-public information, right? So I think that could play into some as well.
Josh, David, let me ask what's going to sound like a cynical question, and the reason I bring this up is I had to have a conversation with a colleague, and his response was, "Well, why, when these Wells submissions happen, why are the responses almost now marketing for the firms? Is there an intention on the part of some of these firms, if I'm going to take the other side of that argument, to make the regulator look bad by doing that and try to sway opinion, or is that just like overly cynical?" David, go ahead.
No, I don't think that's overly cynical. I think there's a narrative in the marketplace. And in the past, I would say before the last few years and before our industry, if you got a Wells notice from a regulator, I think there was an assumption that that entity did something wrong, or there was enough doubt or evidence that led the commission to bring a Wells notice and prepare to bring an action. But I feel like in our industry, it's really different. We've seen that some of the cases have not held up. We've seen the contradictory views that the commission's taken on what is a security, creating the crypto asset security term, and being called out in some of the judges' opinions on that. So I think they are wisely sort of sharing a narrative that they believe is accurate and giving the marketplace, some color about what's going on instead of just accepting sort of, this negative potential outcome.
I feel Josh wanting to say, even the footnotes where they say we won't be using digital asset security, and then in another document they use digital asset security is
on the same day.
On the
Crypto
same
assets,
day.
exactly.
Yeah.
I mean, I think with the announcements, yes, on one hand, I really do think part of it is because, then if you share that information, then there can't be an accusation that you're doing anything. I mean, you can always have accusations of something, but at least you've got that, sort of out there, and I guess the market can price it in. But I think at this point, people are like, look, we're in good company, right? It's not the early days of crypto when it was only the obvious fraudsters, right, who were getting like the low-hanging fruit of like, okay, here's a fraud, here's a scam. These are well-established projects, well-established companies, teams that have presumably done extensive diligence into doing the right things, right? At least doing something legally compliant, we presume. And so, yeah, I mean, I think now, I don't want to say it's a badge of honor because that's maybe going too far, but it's not like you're going to be, I think at the beginning, the fear was, oh, you know what, if you receive something like this, are you an industry pariah? Like, now you're absolutely not. And if we go back years, I mean, I remember in 2016 and even before then, like when you think about some of the questions that we're still grappling with now, the idea that law firms and lawyers would be speaking out, talking about regulators, including the SEC, in the way that people are quite comfortable now. I mean, I really think it shows a progression over time, because it used to be, at least in my experience, I mean, maybe some litigators feel differently, but certainly being critical of the SEC in public was kind of a non-starter.
Right. Josh, David, I want to selfishly rip up the script a little bit, but it ties into something that you just mentioned. We went on a little bit of a hiatus last week. It was very busy. A week ago yesterday, for everyone in the audience, many of you joined us. We had our WSBA Crypto and Blockchain Summit in New York City. We got to see David on stage. We got to see Josh and so many others. Josh, what you're alluding to brings me to one of our panel sessions that a dear friend of ours moderated, where he essentially sounded very much like, oh, it's come in and register. And I could see the palpable, David, you in particular, you and I were talking about this response of, that is not what's happening. David, were you surprised that that's still a perspective by some folks in the industry?
Look, I think outside of our vertical and sometimes bubble, because we're definitely in a our group, and a lot of us know our fellow practitioners. I think in other places, if you were going to bring a new offering to market, you would go to trading and markets, or you'd go to one of the group divisions and say, look, this is the product I want to bring to market. And you'd get comments and direction, and you'd file an S1, and there'd be multiple comment periods. So I think that is the standard playbook outside of our industry. It's just not applicable in our industry, because every time companies have seemed to have done that, they get an internal referral to the enforcement division.
Right.
I mean, imagine if you were a law firm and you were imagine if the SEC was a law firm and you were a litigator. You could just sit in your office and just wait for the other groups in the commission to just, hey, send you an email, and you, I got another case to take. I mean, it'd be like more than an annuity. It would be like a waterfall. But I'm joking a little bit here, but I think that panelist was right, but just not right about our section of the world, so to speak.
Josh, give us your perspectives, and for the audience who's joining us, thank you so much for being with us. If you've got comments or questions for David or Josh, please put them in the chat. The one other thing, Josh, I'll add is we had the privilege of you moderating one of the panels, and you taught me a valuable lesson. If you want to really have a powerful panel, ask the lawyers what keeps them up at night. That's the whole panel. That's all I need to do in the future.
I mean, well, some of them said they were sleeping like babies. The
Which was great
litigators.
to hear. When do you hear that?
I mean, I think, that was a really great thing about the panel. There were so many, because we had litigators, we had transactional folks, we had someone who was in industry. So there was a variety of viewpoints, some quite optimistic, and I think we left on a high note in terms of what we expect going forward. Yeah, I mean, listen, as you guys know, I've had some very positive experiences with certain folks at the SEC. So I will say, with respect to FinHub, I certainly have no complaints personally about that. I think some projects, as I'm just saying this just to be, complete, I think as we've seen has been noted in the public, some folks continue to be able to get certain exemptions from certain requirements. For example, I think we heard with SAB 121 and certain institutions getting certain case-by-case exemptions. That being said, I think it is extremely hard at this point to suggest that a project go speak with the SEC in our industry. It is because you can't promise how long it might take. You can't promise, not that you can never promise, but you know what I'm saying. You can't give an indication of whether you'll get an answer. You can't give an indication of whether, if you get an answer, it will actually be in your favor. And you don't know if you get an answer that is not clear, whether if you proceed with your plan, which your lawyers may be comfortable with, or say, like, it's within the realm of what seems, doesn't seem unreasonable to proceed that way.
Right.
You don't know whether you've opened the box to a future investigation. And I think it's really tough, right? It's really tough.
That's not the way to run a business, is it, Josh? That's not how builders are able to build. Josh, David, one other thing I wanted to raise, and we're going to be sharing photos from the event. And again, I can't thank you both enough for being part of it, and all of the other panelists and moderators and attendees. We went out of our way to make sure we had industry participants. Josh, you referenced some of them, large bank providers, large ETF issuers. I got the same sense of optimism from them. Would you agree with that?
Yeah, look, I mean, first of all, I think it was a great event. It was great to be with like 150 to 200 of our peers. And we had some spirited conversations. Look, I think we've made a lot of progress in the industry, sort of just despite the regulatory headwinds. And I think, look, you look at tokenization, and you look at the ability to, tokenize funds on Ethereum and other platforms. You look at some of the major projects. We talked about on my panel how I'm working with several very large crypto projects that are looking to diversify their treasury and their proceeds.
Yep.
So you are seeing the development. I think it's just, unfortunately, this sort of regulatory headwinds that we have in the US is really stopping the growth that we could potentially have. So I think people are seeing, slivers of it. We're seeing an ETF that's really well received. We're definitely seeing pieces, but we're just not seeing the whole puzzle because we're being restrained in some places.
David, Josh, a totally tangential question, but now that you've both done moderating for a WSBA event, you've done moderating in the past, do you prefer to be a moderator or a panelist? Silence.
You know what? I really enjoy them both, Ron, because I think as a moderator, you really have the ability with the panel to make sure that the agenda that you want to address on the panel gets addressed. And I think you can also lead into questions. Like, I always like to take a quote from someone that, we're referring to and say, so-and-so in X state said this. What do you think about that? And I think that's a great way to sort of jump into a conversation. But then as a panelist, you get to share your knowledge and expertise. But Ron, you're the ultimate moderator. So,
I agree with you. Like, it's not just about driving the conversation, but where I can, I try to interject my knowledge and understanding. Josh, tell me your thoughts.
I mean, I think they're both fun, right? I think especially if you have a great panel, like the panel that I moderated with for the event. I mean, we had Alexandra Scheib, right? We had Kayvan Siddiqui, we had Jason Gottlieb, we had Kel Canty, we had Phil Berg. It was like really, really great because they have so much knowledge. Everyone has so much knowledge that it's, it's fun to play around with who to bring in when. And of course, so that made it super easy. Also, I would say when you're moderating, it's not like you have to come up with like some really amazing answer.
No, you just send them on their way and they've got all great answers. Yeah, it's amazing. It's an easy job once you get used to it. David, Josh, thank you both so much. And again, we'll be sharing clips and information from the event. It was great to have you both and everyone else who joined. You mentioned having fun, Josh, so I'm going to segue to my usual fun, macroeconomic data, which is a very weird thing to say. David, Josh, we had some economic data come out this week. GDP numbers came out on Wednesday. Payroll came out today. David, in a couple of lifetimes ago, if I recall correctly, you were an equity analyst, which means you've got some macro understanding and background. So you definitively remember GDP is C plus I plus G plus X minus N in the calculation. So on Wednesday, we got GDP numbers that said the United States is growing 2.8% on an annualized basis based on the latest data. 2.4 of that is consumer spending. What soft landing are we talking about? And is this feeding into rising crypto prices?
It is just fascinating when you look at the numbers. And I want to even move out a little further. Like, we had a 50-point basis cut, but then the bond yield sort of priced back in those 50 basis points. Look, I think there's two ways of looking at it. One could say that the consumer spending is at that certain rate because some of the prices are inflated, and so that it might not actually be 2.4% if the prices weren't so expensive, because it could be actually less. But the data still is choppy. And I think, like you highlighted, Ron, like for the jobs report, the August and September numbers were revised downward yet again. And I think what's really important is, if we remember, last month's job numbers came in higher than anybody thought, like higher than the highest economists thought. So even though they were revised down 31,000, at least that would have put it in the realm of maybe some of the higher end, economists. So, I just have to wonder if the data is sort of being presented in a way that favors the incumbent. And this is something that probably happens in most administrations. And so I don't want to make this a Democratic or Republican thing, but it feels like whoever's the incumbent will find a way to get the data to sort of be in a position most favorable to them.
Josh, when you hear Dave and I talking about GDP calculations and C plus I plus G, do you want to just like hang up and have a normal conversation with normal people? Or are you happy listening to this?
Oh, I love it. I love it. I never wanted to stop, although I did for a minute think, like, are they going to explain what those calculations are? Like, what is the
David,
X,
we should
what is
have.
the N, what is the G?
C is consumer spending, I is investment, G is government spending, and X minus N is net exports. And those are the broad categories that calculate whether or not the U.S. economy is growing. And the reason I brought it up was so much of that number was consumer spending in the wake of economists saying, we're heading in for a soft landing, but the Fed's going to need to keep raising interest rates. Why? People are spending money. Optimism seems to be doing well. David, I think we're seeing that seep into crypto asset prices very broadly, but to me, it's a very interesting economy. Josh, do you have any perspectives on it? I mean, you've been listening to us yammer on about it. I'd love your thoughts.
I mean, so I was going to give an anecdote. I don't know that it's exactly on point. I'll just say that. But, I used to have a Spotify membership where I didn't hear the commercials. Well, I changed my card because I had a fraud thing. And so it went on to the this was a little while ago. It went on to the non-subscription. And I've just kept it on that because I'm just like, I hop around looking for,
Sure.
I find my ways. But, every hour, right, you get commercials. And it has been nonstop commercials, at least what I've been hearing, in favor of the Harris campaign, hammering home this idea that former President Trump's plan to have tariffs will amount to a huge sales tax and that it's going to make everything more expensive. So whether that's actually going to be true, it does make me think that that is something that is being impressed upon every single hour to all these people who do not have subscriptions, right? Subscriptions are not that much per month, clearly. Like, I have a free subscription right now. So yeah, I'd love to hear your thoughts about that. I do think I could see that having an impact on people if they really think there's going to be massively higher prices. I don't know how that figures in with what you guys were just saying, though.
No, that's a really good point, Josh. And David, I'd love your thoughts. As I was listening to some of the news over the past few days, when you look at the economic surveys, including the things that might make us sit back and say, oh, that explains equity prices going up. That explains people buying into crypto and crypto prices going up. When you look at the data, it seems like things are going well. But when you look at the surveys from consumers, it's a very different story. A lot of consumers feel that things are not quite as good as it should be, which, David, is surprising. And it's not a political conversation, but you could argue food and fuel costs over the past 2 or 3 months, I believe, have started to come down. They're not where they were. But again, it goes to something, David, you and I have often said, and Josh, I think you're hitting the nail on the head. There's the data, and then there's the perception of the data. and how that impacts markets and prices and even who people are going to vote for. David, do you see it the same way?
I do, with one exception, is that I think that the majority of people are really continuously being hit by the increased price of shelter, the increased price of food, and what I'd say day to day, things that they need. Look,
Right.
look. I happen to fly a lot. I can't get out for a lunch under $20 at the airport. It's like
Yep.
whether it be fast food or just like a few slices of pizza and a drink. So like I like to just take anecdotes of things that I think people feel across the board. I think people are feeling prices in the grocery store like on a level, like, you can hear people or just see what's going on. And, when you hear people talking about that, it's obviously something that's noticeable to them and affecting them. And so I think that the reporting in some ways isn't a real reflection of what's going on, because I still think, and we've talked about this many times, lower and middle earners are really sort of struggling. We have credit card debt is higher, auto loan debt's higher,
Yep.
repossessions are higher. All the things that are hitting lower and middle class groups, are really being affected by this inflation. So
Yep.
I think it's easier to say that high net worth people feel it on the edges, or maybe they don't if they're super high net worth. But I really think, the majority of the lower and middle income earners are definitely feeling the pinch from these higher prices.
David, and Josh and you and I often talk about, and we mentioned a little while ago, well, the Fed's cutting interest rates. They cut 50 basis points. Is another 50 baked in? In a dynamic economy like that, lower and middle income earners are not going to feel interest rate decreases because the Fed cut interest rates 50 basis points. And the data is like credit card rates have not come down.
Yeah, you're right. And like, okay, so now they're paying, I don't know, maybe they're paying 19.9% instead of 20.49, or maybe they're paying 29% instead of 30%. And the balances, I think, I don't know if they're at an all-time high, but they're certainly at a multi-year high. So I do see, and I think collectively we've talked about that there are strains on that lower and middle income level that continue to exist, and I think are problematic.
Yep. Josh, weigh in on this, and I guess let's just open that kind of Pandora's box. David, Josh, the three of us talked about making some portion of this talking about the election that's coming up on Tuesday, and I think I agree with you, David and Josh. I think it's a very important topic, and we try to take the politics out of it. I think it's it's certainly very divisive for a lot of people. It's certainly a difficult conversation. Josh, let me start with you. And again, politics aside, why do you think this is such an important election, and why do you think it's so critical for the industry that the three of us operate in?
Why do I think it's so important?
Or do you think it's so, or do you not think it's important?
I think I think it's very important. But I would hold aside maybe some of the larger questions of the election, because obviously that touches on a whole ton of things, from immigration to all kinds of stuff. But for our industry,
yes, I didn't mean to go that off script. Yes.
Yeah.
For our industry, I mean, I think it's critical because we have reached, in my view, I don't want to say inflection point. I feel like that's like a bit like we already passed that. But with what we've seen with institutional investment and adoption, and where we are with the tokenization, where we are with, at least we have the options approved by the on the spot ETFs approved by the SEC. Although, as our friend Greg X has reminded us, it's actually the CFTC that will be the tougher regulator to get that through. But there's so much. We're at a point where things want to move forward, right? En masse, big scale. And I think one of the things we heard, including at our event last week, was maybe there are folks, large institutions, that are on the sidelines on certain projects,
right,
because we're at that sticking point. And I think the whole idea, we saw in Nashville, where former President Trump stood up and said, he wanted to make the US the crypto capital of the planet.
Yeah.
Understanding limitations that may exist from, Congress and, that makeup and things like that. I mean, if we can have something where there is a goal to have us be leaders in crypto from the highest levels, as opposed to the messages we got before, which were essentially, well, if crypto leaves the US, okay,
Right.
someone else can have it. I think that kind of a shift right now is really important. And I think it's still not clear how different, if at all, although I believe it will be somewhat different, how different Kamala Harris's approach will be from Biden's approach.
Josh, I agree with you. David, tell me if you've seen this as well. I think, Josh is pointing to something that I think is important. For a long time, part of the argument in the crypto industry has been in the United States, the U.S. is falling behind, and there's been examples. We look at Mika, we look at what's happening in Singapore, we look at what's happening in Dubai, for example. David, did the message finally get through to politicians that the U.S. is falling behind?
I'm smiling because it's something that the three of us talked about numerous times, that I think in some ways it took funding PACs and really putting the power of the dollar and lobbying in Washington to get this to be an issue and get it to be on people's radar. Yeah. And I think the industry wanted to sort of be the outsiders and not have to go through that process. And I think it's only now that we as a collective industry have gotten into the process and raised money and are deploying it that the message is being heard. And like on the political side, I think, again, let's just talk about our industry and not all the myriad of other issues. Look, if you look in the legislature, if you look in the Senate, if you look in the House, you have Republican members who are bringing, legislation forward. And it feels, the people that I've spoken to, both when I was just in DC and then people that I'm close with in the industry, I would say, and maybe my glasses are a little red coated a little bit, but I think a prevailing view is that if President Trump were to win and the Republicans were to take the Senate, that a lot of the bills that we've wanted to see brought forward in the Senate Banking Committee with a Republican chairperson will move forward. Now, look, I don't think there's going to be a sweep one party or the other personally. So there'll still have to be some bipartisan work to get them passed. But it seems like, the folks that are most against the industry or most restrictive on the industry, have been Senator Warren, Sherrod Brown, and Maxine Waters. And, if the Republicans were to be head of, chair of the Senate, bills that were not able to be moved forward would be able to move forward. Yeah. And I think the linking with the Senate and whoever wins the White House is that appointments all go through the Senate. So if you had a Republican president and a Republican Senate, that Senate would be confirming the appointments. And that could lead to an appointment of a new chairperson that could be more favorable to crypto.
David, you mentioned a couple of the Senate races, and shout out to Adam Goldberg and Dina Ellis, who do our policy update. And in those three races that you mentioned, I think it's a critical point, David. Only one of those three races are a possible loss for the incumbent that's against crypto, and I believe it's Senator Brown, and I could be wrong, but the other two stand very little chance of the crypto candidates winning those races. But one thing I did want to raise, and Josh, tell me if you agree with it, because David, you had mentioned something earlier about the PAC money. I don't even remember the latest data, but tens of millions of dollars have gone into different candidates. And this might sound more controversial than I'll mean it to be, but Josh, I want to start with you. For a long time, everyone in the industry has been saying we're nonpartisan. And then PAC money came in and suddenly became pretty partisan. Is that a net positive or negative for the industry, or am I misinterpreting it?
It's a great question, Ron. I mean, you can hear, even as I'm on this roundup with us each week, trying to be as neutral as possible, right? Because while I'm trying to, share what I've heard from both potential sides,
sure,
I think I'm also trying to make sure that as an industry, to the extent I can, we don't alienate ourselves
Right.
in the event of any outcome, right? So I think that's one of the important things. While people may favor a particular candidate over another, I think burning bridges
Yep.
is a toughie, right? Like, because you have to then swim in that water, I guess, or whatever the right analogy may be. So I think, yeah, I mean, I would say one other thing just about the importance of who is the next president.
Yeah.
At least from what I heard, not this year, but last year, um, I had heard that folks had gotten very close on a potential federal stablecoin bill,
Mm-hmm.
and that some of the sticking points were that some of the agencies weren't perhaps willing or ready to give up jurisdiction over certain types of over stablecoins, right? And whether that's the SEC or what have you. But I also heard, and that's just what I heard, I don't know if it's true, but I had also heard that, yes, they were very, very close, but the message coming down from the administration was no,
Nope.
right? And probably from the feedback from those agencies.
Right.
And so, even though, yes, certain things are up to Congress to pass, it's not like they don't have a sense of what the administration is thinking or wanting. And just like we go to this question of whether there's a choke point 2.0 or not,
Right.
right?
Right.
Whether there's a formal plan in writing or whether it's just people knowing what other people are saying and expectations. I think, expectations are real, and so having a clear message from the top is going to be key.
Josh, thank you so much. David, weigh in on this. And the one thing I want to add, and it kind of acts as a backdrop for a lot of what we've been talking about. Again, politics aside, we've been talking about SEC chair. We've been talking about regulatory agencies. To be clear for our colleagues and for the people in the audience, if all of that happens, David, there's a new president and a new Senate, and regulatory chairs of regulatory bodies are moved out. That doesn't mean regulators can walk into court and say, "Oh, sorry, we didn't mean all of these different cases. You can throw them away." That's not how it works, right?
Yeah. So I want to digress to a couple of points.
Go for it.
One thing is I do want to give a shout out to John Deaton and his race against Elizabeth Warren.
Yep.
I think he's been a staunch proponent of the industry.
Agreed.
I don't know if he'll prevail, but I think he's made some important points, and I want to give him credit for that, regardless of the outcome. Regarding what Josh says, look, I think we all want to be nonpartisan about it, and I think the challenge is that this administration has been so hostile, and we've not really heard Vice President Harris say anything, okay, I want to embrace it a little bit, and sort of, we haven't heard anything really definitive from her about what her views are, or anything that people can really, look to and say, okay, like, we are going to get a fair shake here, or, we will see some difference. I don't know if we've heard names floated around for new chairperson of the commission. So I think like in other issues where, people will look at her views and tie them to the administration because she's been the vice president of the administration. I think it's a little different, with Vice President Trump, because he said certain things and he's not been part of the last 4 years. So I want to set the stage that way. I would like the issue to be nonpartisan. I would really hope that, both sides see the benefit of the technology and the ability to create jobs and, bring efficiency to markets. I think would benefit all consumers, not just crypto holders, but other consumers.
Yeah.
But so I want to layer that. I want to layer that part in. But I think ultimately, Ron, I think that if we don't, I think this is a real opportunity. Like we're in a real opportunity now. And I know Josh didn't want to say inflection point, but if we continue this path that we're on, we are really going to damage our standing in the world in moving the crypto markets forward. You're going to have all these legacy cases that could play out for years, whether they go to the Second Circuit, the Third Circuit, or the Fifth Circuit, and then potentially appeal to the Supreme Court. So you're talking, 18 months, 2 years, 3 years if, the Supreme Court accepts cert. So if we did get a new commissioner in and they were willing to say, you know what, I'm not going to bring this appeal forward, or I'm going to settle some of these cases, it could make a meaningful difference.
Josh, do me a favor, follow up on some of what David's talking about. I'm going to play devil's advocate here, David, and forgive me. When you say the U.S. can really fall behind, when you look at some of the opponents of crypto broadly, how do you respond? Because their answer might be good. It's only for bad actors anyway.
Are we let Josh answer that? Because
I'm happy.
I know I went on for several minutes, so I don't want to.
I mean, to David's point, do you agree with that point, Josh? Or how might opponents of crypto respond in this case?
So I think we've seen how opponents of crypto have responded, because we have seen hearings where we have seen members of Congress literally say, like, maybe not literally, but paraphrasing, say things like, well, okay, so it leaves the country, right? I do think more broadly, and this is something I was thinking about, was in the case of AI, which similarly is emerging tech, right? Also has great promise, also may have or does have certain risks, right? Like any technology. In that case, and it's funny that I'm going to frame this way, because this is actually something that former President Trump has said he would repeal, right, if he became president. But if we look at what the Biden administration did as far as having an AI executive order, it's really a sweeping, as Carol House has described it, a sweeping North Star, right? It doesn't have regulatory teeth. That it doesn't have. It's not prescriptive insofar as it like binds businesses directly, right? But it directs the different agencies to act in a particular way. And when I think about how that is laid out, I think, okay, you've got it laid out as a race to the moon, right? So we want to encourage, we want to make sure we're first, right? At the same time, an arms race. So, okay, there are real risks here. We need to make sure that we are policing funding so that it's not being used for bioweapons, right? Things like that.
Right.
And also a talent war, right? So there are parts in there that talk about easing immigration policies, right? To bring in people with expertise in AI, to educate population about AI. And I think when we think back to the sorts of things that the Biden administration, at least my recollection of what they did, I recall them going out to the various agencies and asking for reports.
Yep.
Right. And one after the next rolled in, talking about national security. And so, yes, we understand that that is a focus, but we really, I think, need something that sets forth goals for how we are going to, what we're going to do with this to win in crypto, right? Not just like, okay, what are the fears here? And as we've seen from Chainalysis and Elliptic and some of the other folks who are really good at this stuff, there appears to be, far less in the way of, or certainly less in the way of nefarious behaviors with digital assets than many seem to be saying. So I think we just really need to have an administration that says this is a race to the moon.
Right. Industries need a roadmap, not just the everything you're doing is bad and we don't want to talk about it. And Josh, you make a really good point on AI. We see similar with quantum computing, believe it or not. Quantum computing is going to make all encryption irrelevant. What's the roadmap, for example? So I know I'm digressing a little bit, but Josh, really, really good point. We can go on the political stuff. The election is coming up. I'm not going to ask anything like who's going to win, but I will ask you both, because Josh, you raised something interesting earlier. Is it as close a race? Do you think it's as close a race as it's portrayed, or do you think it's going to be a much wider win-loss for whoever the candidate that wins is? David, what are your thoughts? I'm not wagering. Just let's get that out of the way, David. But will it be a closer race than we think or not?
So I'm a big believer in prediction markets, and I think this will be a fascinating opportunity to see how effective they are in this election. Like if you look at sports wagering, the lines that are set by Vegas and the sports books, like they're amazingly accurate. And so, you watch a game and they say there's going to be 40 points scored and it ends up being like 39 points or 41 points. So they become amazingly accurate. And so my view is that with the markets, the betting markets being as they are, my belief is unless they change dramatically by Tuesday, is that, former President Trump will win this election. And that I also believe that the Republicans will win the Senate. So I'm not really taking a personal view. I'm just looking at Polymarket predicted, and there are a couple of Kalshi. I've looked at 3 or 4 of them this morning, and they all have him ahead. One sort of 60-40, and then and the others sort of in the 50s, high 50s to low 50s probability. So based on those sort of quantitative data points. That's my prediction.
David, sorry, real quickly, Josh. David, to that point, though, Robinhood itself is, from a retail perspective, offering prediction market options contracts, which is a bit scary but interesting. Josh, you don't have to tell us who, but I'd love your thought on, will it be a close race or not?
So I think. How close is close? What I've been reading about is really interesting to me, like to hear okay, well, it's possible we could have blowouts either way with the electoral college, depending on, a few things. Right. I saw some modeling of scenarios where you ended up with candidates having over 300 votes.
Yeah.
I will say this. I do share David's view about who is likely to win. And I would say, I don't know if it will be close from a sheer population percentage, of popular vote. I don't know. I'm not close enough to that, but I think if we look, not that we're making any investment advice or anything or giving any, if we look at the price of Bitcoin, it seems like some people have a view.
Yeah, no, it's a fair point. No matter who wins, what's that?
What do you think, Ron?
I think that no matter who wins, there will be a mail-in campaign for Klayman and Brill as SEC and CFTC chair. I will spearhead those. I agree with you both, and Josh, you absolutely are right. I should have been more clear on. I think the popular vote. We live in a world with 330 million people, and the challenges of the modern world where there are no giant gaps in popular vote. It's that diverse a citizenry or that diverse a country. But I think it'll be an electoral. I think I agree with you, Josh. It'll be a much bigger electoral college victory than people think. And I agree with you. The prediction markets are showing some of that. David, it's interesting because I agree with you on the wisdom of the crowds and prediction markets, but I haven't looked. Did prediction markets predict the Yankees would lose the series?
Honestly, Ron, it's funny you ask because of all the sports, I'm so ambivalent about baseball that I really if you ask me about football or hockey or basketball, I'd have a view. On baseball, I'm just ambivalent about it. But look, I think there's a couple of really good things that will come out of this election. One is I went and voted early. The ability to vote early, and hopefully we'll have a lot of people voting in this election. I think that's really important. I think people have been engaged in this election. I don't think this is one where we're going to have, a voting populace who doesn't have a view or is sort of disengaged from it. So I think for our democracy, I think this is, really helpful. Ultimately, I think the best thing outcome would be one where we have a clean election and that there's a clear winner and that there's not any sort of lingering doubt about the efficacy of the democratic process for this election. I think that would be our best outcome.
Go ahead, Josh.
In terms of engagement, I agree with David. David, I'm struggling to find something I disagree with you on this week. But yeah, even in terms, so this weekend, tomorrow, And then also on election day, I'm going to be doing a pro bono manning of phones
Wow.
for a hotline for questions, along with many other lawyers in our industry, right? So not just me. And hopefully I'll be trained on this before I get on the phone. But
You don't need
I
training.
say
It'll
that
be
just
fine.
because, never have I ever thought about the importance of doing that. I mean, I realized someone must be doing it, but it was never something where I felt like, okay, this is like seriously important. I want to do this. Yeah. So I think it's really, as you guys know, exciting times, and it seems like every little thing now is under a microscope, whether it's statements by a comedian recently or whether it is statements by Shark Tank folks. It's all under a microscope. What about you, Ron?
Josh, David, I find it difficult to disagree with both of you. For me, and I've often told you both this, I try to take what I see and I look at the observational aspects of it. And I agree with you. It's like it's important that people vote. I mean, I might be old enough to remember when I think sub 35% of the eligible voting public was voting back in I think it was, I want to say the early 80s perhaps. But observationally, I live in central New Jersey. Josh, you live in New Jersey. Early voting for Monmouth County where I live, and I've seen lines every day, almost all day long, for early voting that I've never seen before. And that tells you something about how important it is. And David, to your point, it's good that people are voting because we weren't getting enough of that previously. And I'm very optimistic about where a lot of this goes. We've only got a couple of minutes left, so I'm trying to get away from predictions, but I appreciate the time. David, I was joking a bit earlier, and I joke often about the steak dinner bet, but there was a report out a bit earlier this week, and I got the sense that you thought I was a little too optimistic. I want to ask you why.
Look, there was a prediction, and well, I'll call out who it was. Van Eck came out with a prediction. I think it was $185,000 Bitcoin by the end of the year.
Yes, sir.
And we're currently at 70,000 as I look up here right now. And look, I am very optimistic about the ecosystem. You all know that I'm very much in favor of it. My crystal ball thinks we are very lucky if we get to 90 or 100 by the end of the year. I think we could touch 100 and then hit a sell-off right at the end of the year. We're near there. But to be practical and bullish for next week, I will say that I think we will touch an all-time high sometime in the next 7 days. So that will be my prediction, that we will break the all-time high in the next 7 days.
So this relates to the steak dinner.
Yes.
And I need to clarify as we're getting closer. For Ron's crystal ball, does the price have to reach 100 as of the last day of the year, or does it just have to reach 100 between now and the end of the year?
Well, it was higher than that, Josh. It was 125.
I think it was 125.
Oh, wow. Okay, wow.
I was wildly caffeinated that day. And I think, David, you and I implicitly agreed it just has to touch that price. It doesn't have to end the year at that price.
Yeah.
I figured, David, you put a couple of big buys in, we can cross 100. Just help me out with getting the Bitcoin price up there, and the industry will be okay. But it totally can.
You know what I actually think will happen? So I think that there will be some FOMO when we reach an all-time high, and people who are waiting on the sidelines will want to get in.
Yeah.
But I think when you get to these big numbers, I think like around 90 or 100, I think we'll see a sell-off. I think people will sort of say, oh, I got in an X and it's at Y now, and I want to take some profits. And so I think that area we would see, a somewhat significant sell-off. That's sort of my market psychology take. But look, Ron, this is one of these bets that I would be happy to lose. It's a no-lose bet for me because I'm pretty confident I'm going to have an excellent steak dinner on your account.
And it's a no-lose bet for Josh. He just keeps wondering what the restaurant's going to be.
Yeah.
So We'll definitely.
It's along for the ride.
But you know what, Josh? Whatever time it is, we're going to tell you like it's 15 or 30 minutes earlier than it actually is. So we know that you'll.
You guys know me well, very well.
Well, no, we'll see you on time when we're ready to eat.
We are at the top of the hour. Josh, David, it's always a privilege. For every one of you who joined us out there, if you've got additional questions for Josh or David or I, info@wsba.co. Thank you so much for joining us. We'll be scheduling our post-election webinar at some point whenever we have final election results. David, Josh, if you could be part of that, we'll probably pull Dina and Adam into that conversation as well. Wishing everyone a great weekend, and we'll leave it there. Take care.
Take care, everybody.